All right, this is week 12, outlook number one, starting with the British pound futures, going out to the 4 hour time frame, reiterating what we discussed in Outlook 11.2. I explained the break of structure that led to this action here, and then the immediate and very subtle transition with another action of a break of structure to the low side. And I said because of these succession of actions here that occurred, and because we broke structure to the downside immediately after breaking structure to the upside, we would look for price action to go lower because there's nothing left to be mitigated inside of this area. And so a little bit more information on that. Essentially, why I was so convicted for price to continue lower from this break of structure here is because this run that led to this first break of structure that's its entire goal. That was its entire goal. And you can see that it's pretty much balanced, or no, it's completely balanced as we run up to it. And then we get, the mitigation of the last inefficient pricing here that existed before we broke structure. Everything else is balanced. So this price run balanced itself as it ran higher, showing that its only objective was to take out a previous structural point. It had no intention of moving higher. And this is all from the price action analysis lens. So because of that, that led me to, looking for or the intuition was like, okay, I've seen this before. Why would Price, just make this run here? It doesn't make sense. We explained the battle between the sellers and the buyers here, and then we had the break of structure. I was like, there's nothing left here, especially in this bearish run, that would lead me to believe that price would go any higher because everything, even this run right here, is completely self-mitigating. So only thing that price would be leading to would be these previous structural points that it had generated on the way down to the structural point, this previous structural point here. And so because of that, I was like, okay, wait, I might be missing something. And sure enough, I said in the Outlook 2.2, I almost missed this liquidity point here being mitigated in the transition in the break of structure. And so and this is what I emphasize to my students, is it's really important to mark out your liquidity points, which essentially are all of your highs and lows, and assess the actions that occur there because they're your clue to understanding how structure is flowing, how price action is happening. And so that's what led us to saying that price was going, and that's the logic that led me to saying that price is going to take out this low. And because there's nothing here, we're obviously going to go for this low because there's no area of interest that needed to be mitigated. And lo and behold, that is exactly what happened. And essentially, on the way to mitigating that, we generated, or efficient price action where we got multiple opportunities to trade this as we went towards this immediate target, which is the low of this price leg. And then I believe I said, if not in the outlook, but in various chats, that we would be looking for a free fall here on GU or on pound futures here moving forward. And that's because of the fact that this was a major structural point, and we wanted to see, because of all this sensitivity, who's going to win, the sellers or the buyers. And we clearly see that the sellers won. And so now, because we clearly see that the sellers won, we need to see where that inefficient pricing was generated inside of this run in order for the last bit of inefficiency to be mitigated to send us downward towards these other structural points. And so because of that, that's where I ended up, finding this opportunity today very slowly. I actually had an opportunity where I missed. I took an L on this opportunity here from this price gap because I didn't necessarily see that at the moment. It was very, very subtle. But ultimately, I did get in. I market executed. And so this is what the risk reward is looking like. But obviously, that's not my target. It's just for fun to show what it looks like. And then everything else inside of this run is completely mitigated. Look at the price action. Study the price action here. All of the wicks, all of the candle bodies are completely balanced. There's nothing left unmitigated. This is the very last area of interest inside of this run. This is the origin of the move that led to the mitigation of this liquidity point. Go back and watch the outlooks. If you start to understand that, you'll really start to understand price action and how I'm able to repeatedly find these opportunities. Find the origin of the move. Follow the mitigation of price action, understand the actions, and you'll be able to do a lot of this. All right. So moving forward, what we're expecting, I have this entry here. I'm expecting price to continue taking out or continue lower to take out this low and then continue the price action along with following the program that we have, this bearish program, towards our next two structural points, which would be this low. And the reason why I say this low, everything here this is just no man's land essentially. There's nothing really relevant to me, especially because I'm looking at it from the macro perspective. So this is on the daily. So these are my daily targets. There's pretty much no targets here inside of this that are relevant to me. The only thing that would have been relevant would have been this here, but you can see that clearly got mitigated. And now, looking at it from the 4 hour lens, we're looking to free fall. So that's what I'm expecting over the week. Very bold, statement there. Very bold prediction, but that's what I'm expecting, especially if the logic that I just laid out holds. Expecting free fall, expecting basically bearish price action for the rest of the week on GU, and then move on from there. All right, moving on to gold. So gold has decided to forego pulling back and mitigating whatever this area of interest was there. That's totally fine. We're inside of a range. It's not necessarily important that price pulls back to the expected area that I want. And that's just a function of ranges. They're a lot more random and a lot more, no, yeah, random is the word. They're a lot more random than your runs. Your runs have dictated and decisive areas of interest that it needs to go to. A range will create an area of interest and it won't go back to it for maybe a week, month. It's time. It's time independent, right? It's going to happen in time, but it doesn't necessarily mean it's going to happen when you want it. And so that's just one of the characteristics of trading ranges that you'll have to get used to. So as of right now, though, we do have a break of structure here. And so we're still looking for price to continue lower, aiming towards equilibrium of the range that we were looking at. So remembering that this is the range existing from this low to this high, we're essentially playing on the premium side of the range. I would be expecting for price to pull back into at least equilibrium and then at minimum equilibrium and then into the discount to see if there's any, areas of interest inside of this area that have been left unmitigated. But it looks pretty well mitigated to me as of right now, and I don't feel like doing any detailed analysis on this. I'm just going to play the current price action and aim for liquidity points towards the equilibrium and into the early part of the discount side of this range. All right, so that's it on gold. Not really much to say there. NASDAQ, the one thing that everyone is looking for. So I talked about the draw on liquidity in the last outlook, and that's exactly what we got. I told you, whoever is watching this, that we would have price action moving towards this low. This is our target now, and so the price action is forming, and it's doing what it actually wants to do, or it's moving lower as foretold. We did get mitigation of this price gap here. I told you guys that these price gaps would not have, they would be sensitive, but they wouldn't really hold much weight because they're not a part of any structure formed form structure. So because of that, I said that, yeah, I mean, we could get some sort of response, some sort of sensitivity, but it'll be short lived. I don't think we're gonna, continue higher at this point. And so another thing I want to draw your attention to is, once again, understand how this price action is playing out. After this draw on liquidity, every opportunity, this pullback, every area of interest that is formed is an opportunity to enter in on this trade idea. And so this immediate one was the optimal or the conservative opportunity off of this price gap, and then the next one was mitigation of this sponsored candle that mitigated this price gap, and now we have an action that occurred where we did get sensitivity mitigation of this price gap here, right? So about 50%. And then this led to the pullback, or this led to the run towards a previous liquidity point right there. And so some people will see this and be like, oh no, we're going to buy. We broke a high. But no, this is why it's important to understand the actions. This, as of right now, we need one more candle to solidify it. This looks like a draw on liquidity. So if this is a draw on liquidity, this is just another solidification of the structure showing that, hey, we needed a little bit more liquidity to push us down towards our target. And so if that's the case, if this ends up being a draw on liquidity, then that is exactly what will happen. Anticipated that we will take out this low, immediate low, and then we'll take out the low of this liquidity point, essentially, right? So that's what we're looking at on the Nasdaq, and it's anticipating that this is a draw on liquidity or a liquidity draw, and not a breaker structure. So we need a little bit. We need the low to or the high to form. So we need one more candle on this side to form to really establish that. But if you want to be aggressive and look for opportunities to trade that, you can do that. Right, and it would be a part of, obviously, because the market's closed, this next candle. Or if you had the time and you played aggressively inside of this candle at the time it was formed after we took that high, then kudos to you. All right. Next one is, silver not really doing anything. All right, Dow Jones, really not much to say here on this one. It's just continuation of the program. Once again, same thing. We had the draw on liquidity. I explained that we would be looking for mitigation of the low of the range. We actually generated basically equal lows from this low to this high here. And once again, this price action, if it doesn't make sense, right, it's like, why would it stop here? Think of it this way. If price action just switches from what it was currently doing, it usually means it doesn't have enough liquidity to continue that price run. And so it's going to have to pull back into an area that has enough liquidity to fuel the next push in that price run. And so because of that, on the Dow Jones, we see that we pushed towards this low but failed to break it. And then where did we run to? A previous liquidity point. And so once again, assess the action. That's a draw on liquidity, right? That is a draw on liquidity. We drew liquidity at a liquidity point. We actually formed the high here. So now we should be expecting price to move lower, continuing this price run. And this should be enough fuel for us to take out this low. And then ultimately, what we would be looking for, if there's not, an action here, would be the next low and then the structural point. Okay. And so once again, also understand the price action. Everything is self-mitigated. Look at the mitigation of this area of interest. Look at everything here. There's nothing for price to run towards unless it would be a liquidity point, which would be a previous high. And the local liquidity point, the last liquidity point that was generated that led to the run here would be here, and which is a very pivotal point, because if this ends up being a breaker structure, then this shows that we would look to continue higher towards higher liquidity points. If it's a draw on liquidity or a liquidity draw, this shows that the price run is still strong to the bearish side in this case, and we should be looking for price action to continue lower to take out short side liquidity points. All right, so I believe that is everything. Jam packed with a lot of information in this outlook. 12.1. Peace.